Good morning, good afternoon, and welcome to the latest Sustainable Aviation Futures webinar titled Developing a SAF Action Plan. Thank you very much for joining us today. Sustainable Aviation Futures will host a global series of webinars on the landscape of sustainable aviation and highlighting opportunities to scale production, with this particular case study representing the European region. This discussion will go into opportunities to move projects to a final investment decision and scaling SAF projects as the region prepares for Refuel EU next year. Across the year, we will provide in-depth analysis on the aviation industry and opportunities for SAF, both in the forms of webinar and our free-to-access newsletter, distributed every month and featuring global insights and interviews. To subscribe, please visit the link in the slide. This particular webinar is created in preparation ahead of SAF Congress EU, taking place in Amsterdam in May of this year. Our European event will feature over 600 leading industry professionals across 3 days, with over 180 speakers and 18 hours of structured networking. The event will deep dive into some of the topics covered today, including Europe's SAF landscape, unlocking capital, and creating globally aligned regions across the world, and many more. To see how you can get involved, please email Owen, whose details can be found in the bottom of your screen. Before I hand over to today's moderator, Eva, a few reminders. This session is recorded and will be sent across to you in the coming days once the webinar is finalized and recording edited. Additionally, there is a question and answer, and I urge you to use it throughout. Some of the questions will be selected by today's moderator and answered at the end. If you have any specific question for panelists, we are able to share the speakers' LinkedIns at the end of the session. With that, I'm pleased to welcome today's expert speakers: Marcelo Leonardi at the European Investment Bank, Pedro Campos at Smart Energy, Peter Conway at Energy Interstate, Martin Packer at Opportunity Green, and with that, over to today's moderator, Eva Mailviti. Thank you very much.
Hello, everyone. Thanks very much for joining and for having me as a moderator in this discussion. Without further ado, I would like to welcome everyone and our audience and speakers. And I would like to begin with a set of questions that will give us a better insight on the topic of sustainable aviation fuels. So I would like to start with our first question, which is something that all of us involved in the aviation and in the sustainable aviation fuels area. What can we expect for the imposition of Refuel EU on the 1st of January 2025? And what impact will that mandate have on the European SAF supply chain? I would like to start with our first speaker, Peter Conway. You're muted.
To do the overall, I'm on mute, obviously, as 2 years of COVID should have taught me. Yeah, good afternoon, everyone, and thanks to Sustainable Aviation Futures for this opportunity, and thanks, Eva, for your introduction. Look, I don't think a lot is going to change on the 1st of January. I think what we will see is the start of a process that will accelerate through time. I think the key is going to be a more definitive framework. I think the fact that we'll have more certainty, more clarity about what the rules of the game are will help enormously. I think what we'll see is an acceleration in the early projects, but also, the evolution of the supply chain. I think if you go back 2-3 years, we've had a very disruptive period for any capital expenditure, capital type projects, which SAF projects are. We've had huge inflation, we've had a disruptive energy sector. So, look, it comes at a timely point, at a point where economically things are stabilizing, where we're looking for more growth, where we understand now what the mandate system does look like definitively, and therefore, hopefully it acts as a catalyst for very rapid growth in an area that is desperate for that supply of sustainable aviation fuel.
Great, thank you so much. Our next speaker, Martin Packer, would you like to contribute as well, please?
Sure, absolutely. And I think, Peter, you've already raised a number of very, very good points. And I think, as we delve into the implications of Refuel EU, I think it's also crucial to understand the depth of its impact. It's not merely a regulatory measure, it's also a pivotal step towards realizing some of the larger ambitions, such as the European Green Deal. And at its core, just kind of to rehash, it sets binding targets for integrating sustainable aviation fuels, starting at 2% in 2025 and aiming for 63%. And to kind of grasp that significance, we really need to consider the accompanying EU policies as well. So these EU policies don't really happen in a vacuum. So we're looking at the Renewable Energy Directive, looking at the Alternative Fuel Infrastructure Directive, which lay the groundwork and then incentivize that investment in production, distribution, and utilization of SAF. But I think it's also very important to see that mandate will not only drive demand for SAF, but also foster collaboration, or it intends to foster collaboration across the entire supply chain, from producers, airlines, airports, policymakers as well, private sector, civil society, kind of everybody really should be involved in it. And that's why I think it's really important that we all also work together. And that's why the Sasha Coalition was actually taken form, is that we really try to bring that critical mass to align strategies with the objectives out of Refuel EU, both in aviation and in shipping. And also recognizing that it's not just a regulatory burden, but as Peter also said, it's a catalyst for innovation, for sustainability, and then also for industry-wide transformation.
Yeah, thank you very much for that. Yeah, I agree with you. And especially when we talk about something so new, sustainable aviation fuels, it's something that affects especially the policymakers. It's something that needs to make things more easy to handle, because aviation is a very strictly driven industry. And we have to find a way to, starting from the manufacturer side to airlines, operators, companies that they produce the fuels and all that. So we need to have a combined approach to that matter. And to my view, a more global approach, because we're talking about Europe, but we have United States on the other side, which drives things strongly, as we all know, as well with Europe. Thank you. Our next speaker, Marcello Leonardi, please.
Yes, hello. And thank you for inviting me. I definitely would agree that that the blending mandates, which we're going to come into force next year, are definitely more of an incentive than a burden. The EIB is very interested in what we call the sustainable liquid fuels market. So these are not only SAF, but also maritime and road. And we launched a study last year. We've completed it this year, and we hope to publish soon. And in this study, we've interviewed a series of market players. And the general feedback that we've gotten is, in terms of liquid fuel producers, sustainable liquid fuel producers, of the three modes of transport, the mode that they find the most interesting in terms of offtake is the aviation sector, because that's where they have the greatest clarity in terms of what future demand is. And this clarity is coming from these blending mandates. So you see that producers are investing, they're planning the projects over the next couple of years to target SAF. Not maybe less road and less maritime, but definitely looking at aviation. There is one thing I do want to mention, is that in this study, when you look at how the blending mandate quotas will ramp up over coming years, 2030, 2035, and you look at today's project pipeline, that is projects that have been announced, and if you apply, let's say, a factor of how many of those projects will ultimately come to fruition, because some always do fail. The study indicates that the current pipeline won't meet future demand. And so really we need to make a concerted effort in the near term to really ramp up financing in order to make sure that SAF projects are built and that the SAF will be available in the coming years. Thank you.
Thank you very much. Pedro Campos.
Yes, thank you very much for the invitation, first of all. Pleasure to be here. And piggybacking a little bit on what Marcelo was referring to, it's important to distinguish between in this Refuel EU aviation rules, the fact that we're speaking about different types of products. There's the bio-SAF and the e-SAF, as we call it. And Smart Energy, well, the company that I represent, comes from the electricity angle. So it's the synthetic fuels and synthetic sustainable aviation fuels, so electrons related, that is important to highlight. And with this in mind, and to come straight to your question, the 1st of January 2025 is not the main milestone because the subquotas for this specific niche market or segment, they only kick in 2030. So actually, we speaking about the burden or an incentive, I would say that it's a very good incentive that actually delays a little bit, stalls a little bit the process for developing this type of e-refineries, because we need, because the market will also be stalled by this obligation. With that in mind, it's also important that by that time, the electricity price will also drop and the eSAF will be more competitive in the market. But it's really important to differentiate the two, because we are speaking about two different products that compete in two different ways, and with actually give different opportunities for different types of players. For example, incumbent oil and gas players, they are more focused or tilted towards the bio SAF more than anything else, because it's quite adapted to their business model. eSAF is a different animal, so you need the electrons, and most of the oil and gas companies are not yet in that path.
Great, thank you very much. Moving to our next question, how are companies beginning to prepare compliance measures? Following the same sequence, Peter, would you like to start?
Yeah, so what we're definitely seeing is, in terms of compliance from the airline industry, far more activity, a greater willingness to engage on offtake arrangements, and also we're seeing a huge interest in actually supporting projects in various ways, whether that be through memorandums of understanding, whether that be through, as I say, offtake arrangements, in many instances through direct investment. I mean, we've seen a number of instances globally in recent weeks where airline companies or airlines in association with others have provided funding for various projects. I mean, Southwest Airlines, I think, invested 30 million into LanzaJet earlier this week. So, I think that's not specific to the EU, but I think what we're seeing is across the airline industry globally, the recognition that the mandates, the targets, whatever your jurisdiction may be, are here to stay. I think there's an embracing of those targets and a recognition, therefore, that they need to work with the producers of aviation fuel and sustainable aviation fuel, and also then how they have to act as part of that process, how they need to partner. So, I think what we're seeing is really a far more supportive environment, far more engagement from the end users, and the same kind of engagement from the suppliers of aviation fuels, the oil and gas companies and some of the trading companies. So yeah, much more activity, a very positive start.
Great, thanks very much. Pedro Campos, the next one.
Yes. So we can see it from two angles, but aviation companies, they at least in Europe, they have it very high in the agenda, in their green agendas. They compliance is a key element, but because there's shortage in the market, and it will be there for quite a time, and as Marcelo was referring before, the fact that they see that this lack of supply might materialize, it gives them an extra push to support companies like ours, early investors, and commit to in a long-term approach. It's but for us, from a investor and the developer of such type of projects of synthetic fuels, the point is, well, we're not concerned about the compliance measures in terms of green hydrogen. We are more because this is embedded in our genes. That's what we do. So it's taken care of from the onset. The CO2 is the issue, and CO2 is the element that, in terms of regulatory framework, it might still change in the future, which exposes us to a risk that it's difficult to manage. Nevertheless, we look into biogenic sources as much as possible, and we try to combine the usage of hydrogen from the industrial sector in sectors that they always have at least a share of it that cannot be decarbonized because of the fuel mix. These are the sectors that within their process, they always release CO2. So that's the so-called unavailable CO2. And this CO2 for us, it's very clear that we'll have to, even if the rules are, they don't dictate that right away, they should and they will for sure in the near future, once we realize that if we want cement, we have to have CO2. It comes from the process. It's part of it. So we look into, it's not just aviation. We're speaking about maritime as well when we speak about e-fuels. And clearly, these hard to abate sectors of long haul, especially in terms of mobility, long haul mobility, they don't have much solutions, and it's much better to use the CO2 available and make it available for usage via synthetic fuels than to store it and face risks that stem from that type of approach and neglect the value of the CO2.
Thank you. Martin?
Yeah, so I could probably not give so much insight from kind of the broader kind of large industry, but coming from a civil society perspective and from the coalition perspective that is SASHA, where the bulk of our membership are smaller companies, startups. I think what the added value there is really that we have that these smaller companies have the luxury and the flexibility to actually innovate in the right direction and kind of be kind of those brave and bold innovators to really kind of disrupt the system and bring in systems and innovations that can be brought to scale to actually be able to comply then with the measures that are proposed. So I think, you know, what is needed there from that perspective is really that enabling environment, the enabling political environment, the enabling investment environment, where this kind of innovation that is conducive to compliance is actually in place. So whether it's then for smaller startups, whether it's for larger, I think that what is really important is that those innovations can then be brought to scale.
Thank you. Let's move to the next question. What role will more financial investment have in scaling SAF projects? Marcelo, would you like to answer that? Start with that.
Sure. So going back to the issue of the pipeline that I mentioned in my previous answer, in order for, let's say, there to be the supply of SAF in the future, we don't only need to increase the number of projects, but also the size of the projects. Because really, by increasing the size of a project, it's one of the ways that you will reduce the production cost of SAF. Because of course, we know that SAF is many times more costly than conventional kerosene, for example. So these large-scale projects, we're talking sometimes not even hundreds of millions of euros, we're talking billions of euros to build these large industrial scale production projects and all the infrastructure that they require. So really, these aren't projects that can be easily financed on balance sheet, maybe with the majors, the oil and gas majors, but normally sponsors don't have the balance sheets to finance this. So really, you need to bring in commercial lending. And what we find is that commercial banks currently are not willing to provide the financing for these large scale projects, which I believe the SAF sector needs in order to bring down production costs and begin to close the green premium between SAF and conventional kerosene. Thank you.
Thank you. Peter, would you like to be the next one?
Sure. So look, you know, I think the starting point has to be a recognition of how complex SAF is. You know, if you talk of most industries, or even hydrogen, you've got blue and green, so you've got two choices. You get to SAF, you've got 7 pathways, likely an 8th coming on board soon with M to J. So first of all, you need to kind of distinguish between which ones can really be scaled up and which can't. At Energy Estate, our focus is clearly on scaling up projects because we believe that fundamentally they need to be cost competitive, and that scaling up is what's going to drive down the cost of financing. at the cost of the end product. I think then you need to bring the financing community with you, and we're very privileged in having a number of people, myself included, who are from a project finance background. So from the outset of our projects, we factor in the risk assessment, we factor in the kind of counterparties we believe are necessary for the financing of a large-scale project. But look, we're in the early stages of a new wave here. It is going to take time. There will need to be precedent developed on the contractual side, on the financing side. There needs to be an understanding of, what risk banks are comfortable with. And one of the key issues is going to be going from, relatively small projects, which is the way, financing institutions often start, to multi-million and indeed billion-dollar projects. I mean, if we look at our project pipeline, the smallest projects are around 500 million. The largest projects are $1 billion plus. I think on top of that, you have to look at the complexities around your sourcing. And as was said earlier, where do you get your biogenic CO2? Where do you get your hydrogen? Is that green hydrogen? What's your carbon intensity going to look like? All of these are key factors. So you need robust counterparties. You need strong sponsors. You need a whole package that financing parties can get comfortable with. And for us, that's really part and parcel of the ongoing development of our projects, because we think that's necessary.
Thank you very much. Pedro.
Yeah, allow me to chip in, and for this question on financial investment, I would like to differentiate because bankability for hydrogen projects and for hydrogen derivative projects is not yet there in the sense, if we have in mind the highly levered non-recourse project finance that we are used to in other market segments. And this is because indeed there is a perceived risk that doesn't allow to go straight to highly levered financing. That is one of the, so it means that we need more equity it means that we need more equity and we put more skin into the game as from the very beginning. And therefore, that's actually one of the reasons why we just opened an office in Abu Dhabi to really go after the big money required to implement these projects and to take the risk at the very beginning. Now, if we speak about financing and financiers, we also understand that they need to chip in at some point, and they need we need to share. We need to find a financial structure that works for them too, but for them to keep the borrowing rate, and the IB is here, so for them to borrow to keep the same borrowing rating that they have, they need some kind of guarantees and some kind of sovereign guarantees that allow them to de-risk this type of projects. And I guess the EU via, for example, the hydrogen bank and so on, with securing the offtake or the certain price for the offtake is a way to reduce the risk exposure. It could also be via member states, again with the European Hydrogen Bank to do that. It could be also via guarantees from the member states to cover for that risk. But these type of instruments are not there yet, and they should shape up and build up to the market demand.
Thank you. Martin, would you like to answer as well?
Absolutely. Sorry, I lost my unmute button. No, I think as if we look at kind of the financial investment and the role that it plays, I think we also need to look at it kind of on the longer timeline. So in terms of scalability, on the one hand, you've got the EU funding programs. So you've got Horizon Europe, you've got the Innovation Fund, which really offer kind of those avenues for research and innovation in the technologies themselves. And then we're looking at private sector investment and kind of government support as well, vital for expanding production and bringing these innovations to scale. So, but also in terms of upgrading infrastructure, enhancing distribution networks, and those kind of things. So I think it's really essential to explore various financial mechanisms and kind of this sort of blended finance. Could include green bonds, venture capital, project finance to really kind of mobilize this private investment in these sort of projects, and really look at what incentives either on the market or within kind of government schemes can also create economic incentives for this investment, but also to drive down costs and also enhance competitiveness. So I think, as we move kind of towards that scaling up of production, we really want to look at kind of prioritizing securing that necessary financial resource through kind of that blended finance. And again, looking at that kind of collaboration between public and private stakeholders to realize those ambitions.
Right. Thanks very much. Our next question, what influence will guaranteed return on investment have in scaling opportunities for projects? Starting with Peter.
Yeah, sure. So I suppose just heading back a little, I'm probably a little more positive than Pedro on the role of banks. And I think part of the reason for that is the demand side, I think, is clear. I think for sustainable aviation fuel, unlike a lot of other markets, the market is going to be short. And I think the finance parties know that. And so one of the biggest risks is always your offtake risk. Now, I wouldn't undermine that offtake risk. I think you need to have a credible route to market. You need to understand both physically how the product will move to market, but also who your offtaker will be. But I think whereas on other oil and gas projects, banks would be very focused upon the specific counterparty to an offtake arrangement, I think potentially they'll be a little more flexible here because they know there will always be demand for that product. I think when you then put any kind of CFD or guaranteed return on that product, so much the better. It only enhances and safeguards the offtake side of the equation. My suspicion is the complexities for SAF are going to be much more on the feedstock side and on the process side. On the process side, because I don't think a lot of the technologies are proven yet. I think a lot of them that are proven need to be scaled up. So if you look at something like alcohol to jet, what you're seeing there is a massive movement towards scaling up what is a known process. The feedstock side is the most interesting, whether you're looking at waste or whether you're looking at alcohol to jet, which is likely to be sort of fairly novel in Europe, much bigger in the US, whether you're looking at biogenic CO2 for some kind of Fischer-Tropsch or methanol process. In all of these instances, you need to find a long-term source of that feedstock. And then in some instances like Fischer-Tropsch, you also have to align that with cost competitive green hydrogen. And so it limits your ability to scale, and it narrows the number of sites you can locate at. So, to me, those are the challenges, but certainly having a guaranteed return, is a big step forward. It removes one of the biggest impediments to financing. It should give a lot of comfort to both investors and to debt finance parties. But fundamentally, your project still needs technically to meet its requirements and to produce. And that's where I sense the biggest challenges are going to be.
Thank you. Marcelo?
Yeah, I don't want to disagree with what Peter said, but in the conversations we've had while carrying out the study with banks and with project sponsors is that banks are not currently ready to finance these large-scale projects, apart from other risks. But the offtake risk is definitely a risk because currently project sponsors cannot find long-term offtake contracts. Airlines are not willing to sign offtakes from what we've been told, more than 5 years, which for financing, which may be 15 or 20 years, that's really, it's too short. Now, going to Peter's point about, well, if in 5 years' time you don't have an offtaker, you'll be able to find somebody else because the market will be short. If it's true that the market is short, that very well may be true. But there's another consideration that project sponsors mentioned to us in our discussions with them, which is what we've called sort of a first mover disadvantage, meaning that the first plants, especially in the e-fuel side, the first plants to be deployed will probably be the higher cost producers going forward. If you assume that as economies of scales are achieved and increased efficiencies and so on and so forth, production costs will fall over time. So that is one consideration that early stage investors have. They don't want to be caught out in 5 years without an off-taker, and they're the highest cost producers. So that's why in our other conversations with project sponsors and with banks, especially for the first types of large-scale projects, they've told us we need to have these long-term off-take contracts or some kind of mechanism that provides us with the security of off-take volume and prices for a period sufficiently long to get the commercial financing that we require.
Thank you. Moving forward with Pedro.
Yeah, so I agree that long-term offtake agreements are critical to get the project off the ground. It's not a question about scaling up. If we were speaking about scaling up, it would be much more relevant for other hydrogen market segments, new markets for hydrogen, and not necessarily sustainable aviation fuels, because in those markets the incentives are not there yet, and therefore the instruments like the auction for a premium proposed by the European Hydrogen Bank, and even which something that I find very clever from DG Climate, to allow the member states to add money to the pot via the auction as a service feature, is something that really creates the right stimulus and business certainty required to boost the market build-up. But for SAF specifically, I don't see that need. I would see it mostly from the offtake long-term agreements more than anything else.
Great, thank you very much. Peter, would you like to add something more?
Yeah, I suppose one of the points is I don't see airlines necessarily as being long-term offtakes. I think if you have a look at the airline market, you know, with the exception of maybe 2 or 3 carriers, very few are going to be investment grade. So I don't think banks will take long-term risk on airlines necessarily. I think that credit strength which doesn't exist there. So I think there will be, when I say route to market, you know, it's as much looking at the intermediaries, the oil and gas companies who specialize in aviation fuel, or indeed, you know, airports in some instances. But I think, you know, when you talk about offtake in the sense of SAF, I wouldn't necessarily equate that with airline companies. I think there's an issue there. I think just to pick up a couple of other points from that Marcello made, I mean, certainly the conversations we're having with banks is there is a definite appetite, but it very much depends on which pathway you're following and how robust that pathway is. And again, goes back to my point, you have 7, you know, potentially by the end of this year, 8 pathways. So when we talk about SAF, it's not a homogeneous approach. You know, it is 7, potentially 8 different approaches with peculiarities around each approach. I think what we're finding from the engagement with banks and also with export credit agencies is they understand the need for the product. They understand that there is market demand for the product, and they're engaging in a lot of detail already because they understand the hydrogen and hydrogen derivative chain. They understand the production of hydrogen. They understand that in a lot of instances, the processes are not new. They're just put together in a new way. So if you can overcome that and then show your route to market, I mean, certainly what we're finding is there is appetite there, and certainly an appetite to engage at a very early stage.
Thank you. Marcello, would you like to add a few points extra?
No, I mean, the points Peter makes are very relevant. I think the faster that the SAF market becomes a sort of a commodity and you have commoditized trading, the better. And in one of the findings in the study is to find from a sort of policy regulator point of view these types of incentives or regulations to really promote as fast as possible sort of the widespread trading of SAF and other liquid fuels. The other point I just want to quickly make is another issue which was pointed out to us, which is sort of more on the regulatory side, is if the European market is not able to meet the demand, the future demand of some of these fuels. And as a result of sort of the political pushback, I guess you can see, against green policies in Europe, some producers are worried that there may be political pressures in the future to start to weaken some of these obligations. And of course, if that were to happen, that would undermine the SAF market and the market for other liquid fuels. So really, it's even more of a reason to make sure that the supply is there when this surge of demand takes place that the sector is expecting.
Thank you. A few more questions for our panelists, starting with our next question, which is how can more projects be moved to final investment decision, and what infrastructure needs to be put in place and guarantee these projects to be developed? Marcelo, would you like to contribute to that?
I don't want to monopolize the
well,
discussions.
It's just, in terms of rotation, not having all people in same sequence. But yeah, I mean, we can start with you, or I can move forward to another speaker.
Well, I'll just quickly. Well, we've already talked about the offtake. There is also issues around technology risk, as was already discussed, and of course, as Peter and other speakers mentioned, depending on the type of production pathway that you're talking about, the technology, you have more mature technologies than others. But again, one of the feedbacks that we've gotten from market experts is, in order to meet the demand which everybody expects to be coming to market, many different technology pathways will need to be deployed. It won't be just one technology pathway that will be able to meet the demand. So really, again, I think as fast as possible, we need to find the mechanisms to promote the sort of the de-risking of these projects. And in terms of technology risk, I think that one of the best ways to do that is to get these large-scale plants up and running. Because if the market, if the sector can see that these large-scale plants, which we need to reduce costs, can be built on budget, on time, and perform within expected parameters, then that will begin mitigating the technology risk. And I say this because 15, 20 years ago, I financed some of the first PV plants in Italy. And I remember that when we financed the first commercial scale PV plant, there were a lot of questions from banks about how the PV panel worked, what questions around the degradation rate, questions around the inverter. Fast forward 15, 20 years, it's almost plain vanilla to finance a PV plant. And that's where we need to get to with SAF production.
Thank you very much. Pedro, would you like to contribute as well?
Happy to. Final investment decision and how to boost it. I mean, from an infrastructure perspective, and the issue is, well, legal certainty is very important and relevant for the first projects to succeed. But it is important also that the market and its rules adapt swiftly to how fast how fast SAF comes into the market. And why am I saying this? Because as you might know, today, according to inspection authorities or some inspection authorities, it's not possible to supply neat SAF at the airport, at the infrastructure available at some airports, which means that the bargaining power of the fossil fuel suppliers, the incumbents, is quite high when newcomers take a lot of risk. And this, so there should be some kind of adaptation in the rules that acknowledge that dealing with SAF is not that different from dealing with fossil fuels, and therefore there are two options. One is you actually put aside this service of this planning service and make it like a public mandate to open up the infrastructure for everybody with a specific fee, and it's fair for everybody. And this is one option. The other one is to change the regulation and allow for the infrastructure to be developed at the airports to allow for this blending. These are just some thoughts that I had in mind that for me are critical to boost the final investment decision of some projects and clear that risk out of the table.
Thank you, Martin.
Yeah, thanks, Eva. I think so. Looking at it from a green hydrogen perspective, as a SAF, which is kind of our bread and butter. If we look at to kind of moving that towards final investment decisions, I think it's very important to kind of look at how do we confront some of the regulatory uncertainties and infrastructure demands. If we look at the RED II, if we look at the Sustainable Finance Disclosure Regulation at the EU level. They offer quite pivotal frameworks, which provide then investors with a lot of clarity, a lot of stability in their decisions. But I think if you look at it as a whole, infrastructure development remains a significant hurdle, because it doesn't happen when you look at green hydrogen, for example. It's not just one step within the chain that actually needs to be invested in. You're looking at establishing electrolysis plants. You're looking at storage facilities. You're looking at distribution networks, which are all kind of vital components of a robust green hydrogen supply chain as a sustainable aviation fuel. And each of those will necessitate kind of a substantial investment and coordination as well. So again, and this is kind of going to be my take-home message, I would say, from the webinar, is that there is really that need for collaborative efforts between public and private sectors again, and that really these partnerships need to be leveraged. To really kind of get these regulatory incentive and innovative financing mechanisms to really catalyze that development of the infrastructure. So again, that's kind of my take-home message. Again, that it's not an either-or kind of story. It's really we really have to look at kind of what options are there. How can we creatively as well collaborate, I would say, with the public sector, with the private sector, even with civil society at the end of the day, to really make sure that that we kind of move towards that greener, more resilient aviation future.
Great, thanks very much. And Peter.
Yeah, so I suppose if I stick more to the FID part of the question, I suppose from a very biased developer's perspective, I'd say, look, give us a chance. I mean, people are talking about why not FID more quickly. Have a look at what we've achieved. I mean, across the hydrogen spectrum at the moment, there seems to be this perennial question: why are projects happening more quick? Why aren't projects happening more quickly? Well, because electrolyzers are being developed at a rapid scale, because we've had 2 years of cost inflation across solar and wind, because transmission grid constraints exist in many places, and you've got to find a site with either biogenic CO2 or the appropriate feedstock close to working through your route physically to getting the SAF to market. I mean, we're talking about very, very complex projects here. So, the market is moving very, very quickly. We now have enabling legislation around, specific mandates. The fact that those mandates grow will continue the push for scaling up of technology, for new technology coming on. But I think, kind of intrinsic to the question, there's a bit of sort of self-criticism that I just don't think should exist. I think we should be getting behind the projects, supporting them as much as they can, and looking at what we've achieved. And we're now, to my mind, in a much better place than we were 2 years ago. Supply chains are much more robust again. We're starting to see technology improvements and price falls in some instances on electrolyzers. We're certainly seeing the scaling up of electrolyzers, so the hydrogen is there. So yeah, look, I think it's just a question of focus, keep your head down, keep working away, and the FID will come. but we're still at an early stage of evolution here, and let's just recognize that and not get carried away and start creating negative sentiment because not more projects are closing at the same time. I think the industry is doing a pretty good job so far.
Thank you. Thank you. Two more questions for our speakers. What role will certification have in ensuring a scale of feedstock availability? Pedro, would you like to answer that?
Yeah, happy to. For me, the importance of certification is really to enable a book and claim system that can be extended beyond the aviation fuel suppliers in different EU airports, but also to aviation companies, because this is the feedback that we get from big European aviation groups. So it's important to be able to use the book and claim system within their scope of activities. And why do I bring this forward? Because in the end, it's if we talk about the CO2 footprint, which is something which is what we are all trying to reduce by doing this, and looking at the different intrinsic characteristics of each pot, it might be much cheaper to produce and have a higher yield to produce electricity from renewables in for example Portugal and Spain, because of the right combination between sun and wind, and therefore to produce SAF there would make sense. And then aviation companies that fly from one place to the other can compensate this by selling certificates elsewhere. So the point is, you can if the SAF, which today is already allowed to be blended at 50% rate in any airplane that flies today, if a company can fuel the SAF in the Iberian Peninsula with that limit in mind, then there will be, if we look at the quotas and how they evolve, there will be a lot of possibilities and easier to decarbonize the industry from the very beginning. That's my take on that. Now, when the time comes and the uneven development of renewables and SAF material kind of fade away at a later stage, then we can unwind this type of book and claim system. But until then, which I believe it will go beyond 2035, we should keep it open and extend it to the aviation companies.
Great. One last question, which I'm also very much interested, since I'm the program coordinator of Aviation Aerospace Sustainability Graduate Degree in Imperial Aeronautical University, my role is to prepare tomorrow's professionals that they will work in the aviation industry for sustainability. What do you see right now in terms of skills and knowledge? What it is required? Do we have people with the necessary skills to work on that sector? And how do you see the skill gaps? Are there skill gaps, or can we fill these skill gaps? Who would like to start? Maybe Martin?
Sure. No, thanks for that, Eva. And I think it's something that's also quite important for us. And it's not kind of the first thing that people would think about, but of course, having that skilled workforce is imperative for the entire infrastructure to work. And I think it is crucial to recognize kind of that important role that a skilled workforce does play. And also the importance of job creation, and so both supply and demand, I would say. Because that transition to SAF really does demand an expertise in various fields. I mean, we're looking at biochemistry, we're looking at chemical engineering, renewable energy technologies, supply chain management, maintenance, kind of the whole range. So you know, if you look at kind of the skills gaps, there are actually mechanisms within the EU, looking at it from the EU perspective, that could actually provide a framework to promote that skills development. There's the skills agenda for Europe. There's the European Green Deal, that really look at kind of how do you promote and stimulate that lifelong learning in green sectors, which includes the aviation sector. And I think, again, here, it's really crucial to have that collaboration between educational institutions, research organizations, industry associations as well, to kind of, step up in that role of, to step up in that role of like creating specialized training programs, but also knowledge exchange initiatives. So it should be a combination of kind of formal and non-formal learning and that kind of whole lifelong learning process. And again, I think, it's another form of investment, the investment in the workforce. So it's kind of more of a soft investment, but still equally as important to really kind of unlock that full potential of sustainable aviation fuels in the industry.
Thank you. Pedro, I saw you smile when I posed the question at the beginning.
Yeah, no, because well, everybody looks at this from a very negative angle. I tend to look at it from a positive angle because I see a lot of opportunities in this. Actually, and the opportunity stems from the fact that there are plenty of skilled workers in the fossil fuels industry. And I'm not speaking just only about oil and gas, but also about coal. And Martin mentioned the parts related with oil and gas. I would say even the just transition that is required in Europe to get this coal, fossil fuel based regions off the ground with a different mindset. They are needed, and they can easily be converted to this nascent green chemical sector without major issues. So I see a great opportunity. And from a selfish, let's say, a smart energy perspective, we are doing this exactly what I'm saying. So we're tapping the market and getting these oil and gas human resources to attracting them because it actually meets their goals as well, their personal goals to contribute to the transition, the energy transition, and the sustainability path. So it's kind of, well, we'll look at it. I'm positive that was why I was smiling.
Thank you. We have 6 more minutes until we're at the top of the hour. I have some questions for our speakers. So what is the industry view on price premium for SAF over the jet fuel? Assuming multiple pathways to deploy, how would off-takers adopt a technology agnostic approach to always ensure cost effectiveness? Who would like to answer?
Yeah, I'll take that. I think to answer it in reverse, cost effectiveness is going to come from scale. I mean, if you have a look at carbon-based aviation fuel versus SAF, look at the size of a refinery and look at an integrated refinery and see the product mix and see what they can do and work out why they can produce aviation fuel at the price they do. So we need to scale up. We need to have that refinery mentality. We need to get the skilled workers across and provide attractive employment opportunities for them. Look, the premium's going to be there because there's going to be a shortage of aviation fuel, and because at the moment, many of the pathways are expensive. They're expensive because they're new, they're novel, they're small. But, go back 20 years on wind turbines and solar, and have a look at the way costs have come down. Costs will come down through greater efficiencies, through mass production, through better understanding the technologies, and through scaling up. And I think we're going to see all of those come through on SAF.
Great, thank you. Pedro?
Yeah, it's not necessarily the competition is not necessarily on the one that is most feasible from an economic perspective or from a pure financial perspective. It's also about the physical feasibility. So the feedstocks for bio-SAF they have their limits, and that's why when you look at the quotas and sub-quotas for SAF in Europe, you see that the growth rate of the sub-quotas for eSAF is much higher than actually the fading away of the share of the bio-SAF, if I can put it that way. And there's a reason for that. So it will go along, and in the end, it's all about dynamics. So if renewables are going to account for 90% of the power in the grids, I'm sure that the price drop will happen and materialize, and which will bring the SAF to competitive terms with BioSAF by that point in time. So the dynamics, it's not a question of choosing the winner. It's in the dynamics, there will be space for both, and they will all be competitive in the end.
Thank you. Thank you. One more question from our audience. Would understanding carbon intensity prior to development would incentivize further investment in SAF projects? Does carbon intensity play a critical role in investment in SAF producers? Any thoughts?
Look, we've got projects in the US where carbon intensity is a key part of the sort of the tax credits associated with the Inflation Reduction Act. So we're all over carbon intensity. But I think that's not just a price point, it's also a philosophical point. You know, I think the days of greenwashing, shortcuts, everything else are long gone. You know, what we need to be doing now is trying to bring down the carbon intensity all the time on every product we can, because that's just the way we have to go. So, you know, you have to measure the carbon intensity, you have to focus on it. And that goes, you know, from looking at different fertilizers for the crops, for the biogenic CO2 that you're going to use in your process, to your carbon intensity on the grid and transmission, all the way through to then, you know, what CO2 you use. All of these have carbon intensity factors, and it's a real cradle to grave situation. You have to focus on it in every segment of your supply chain.
Great, thank you. Anyone else who would like to contribute to this one? We do have 2 more minutes for another question. The last one. Has the EU made the detailed requirements for SAF production, like the additionality requirements on hydrogen and sunset clause on use of fossil carbon, too erroneous for its ambitious targets to be met? Is this continuing to a lack of viable projects? Peter, I would like to hear your views since you smiled on that.
Yeah, look, it's a necessary evil. It would be great if you want cheap hydrogen, which is going to be the backbone of Fischer-Tropsch or methanol to jet or power to liquids, then you need cheap electrons. To have cheap electrons in Northern Europe, it's going to be some sun, yeah, so some solar, a little bit of onshore wind, and probably hydro. Now, question is, you know, if you start cannibalizing, if you start diverting those sources, you know, just to hydrogen, what are the implications of that? I think through time, that's what will happen. I think we'll have far greener grids moving forward, but you can't do it now. You have to have additionality now so that you bring on the new green electrons before you start looking at the end products. So absolutely agree with where the questioner is going. As I say, it's a necessary evil.
Thank you. Thank you very much, all of you. We're at the top of the hour. I will hand over the closing remarks to our host. Thank you.
Thank you very much, and thank you, Eva, Marcela, Peter, Pedro, and Martin as well. Some really fantastic insights and discussions that took place throughout the hour, and perfectly to time as well. Apologies if your question wasn't answered. A reminder that in our follow-up email, we will be sharing the LinkedIns. So if you have any specific questions, then please use that opportunity. Additionally, you will hear from all of the individuals or companies in various extents at Sustainable Aviation Futures taking place in Amsterdam in May. For more information on that, please do visit our website, sustainableaviationfutures.com. Once again, thank you so much for your participation, for your involvement and eager questions. Thank you very much, and have a fantastic rest of your day. Thank you.